And we should any minute now. There you go. So we're going to be recording. So guys, amazing day. Today is Wednesday, the 10th of December. Wow. Okay. And we are looking at the Dixie. Now we've been told about today in regards to the Fed day today, be releasing the interest rate decision at 7 p.m. All right. So what we may see is we may see some volatility before that, or we may see the market doing absolutely naught before that and waiting for that time. Okay. Either way, we are ready. All right. We can see here that these markets, which is the Dixie this morning, has pushed straight out of the Asian session through Frankfurt and pushed through New York lows. Okay. All the way down into the middle, 50% or so of the London session of Tuesday. Okay. And we can see here that, we're wondering whether or not we're going to get any type of reaction that we look for in Unity, yeah, after taking liquidity from below New York session and from tapping into this London session, all right? So we can see here that the market, there is something going on at the moment, all right? There is something going on. The market has made a manipulation W, okay, which essentially identifies the first phase of a potential change of character, okay? But we want to see that market correct and continue. Okay, so for those of you who don't know, boom, this is a level of point of interest. We want to see the markets make a manipulation W past that point of interest. Then we want to see the market correct, which I'm going to put in a different color. We want to see the market, so the market indicate, yeah. And then we want to see the market correct, okay, in a different color here. And then we want to see these markets continue. All right. We don't get excited until this is played out. Okay. Because the markets can do what they want whenever they feel like doing it. And even then, even if we see this happen, we still must manage our risk. Okay. To manage our risk, we use a calculator so that we know what our lot sizes are, called the Cashback Forex. All right. They've actually changed the name to FX Verify. If you want to see, there's the domain name, fxverify.com. Okay. I'll put the link in the group if for whatever reason you don't have it, okay? But ultimately, this allows us to manage our risk, meaning we can go in here, we can change this from price to pips. We can put in what our account size is, yeah? If our account size is 100K, we want to put in there 100K, and then we're going to be able to say, okay, we want to risk 1% of that 100K, yeah? And maybe, for example, imagine our zone of risk was 20 pips. When we hit calculate, that is going to say that our lot size for GU should be 5 lots to risk $1,000. Yeah, because we want to cap our risk. We want to manage our risk. Yeah. Similarly, if our account was 10K, okay, our lot size would be 0.5 to risk just $100. If our account was 1K, our lot size will be 0.05 to risk just $10 at a time. Either way, every single one of those numbers was 1% risk, okay, based upon this risk size, this stop loss size. So if I was to take a trade for argument's sake, and I was to say, okay, I want to get in this trade here, based upon this red size here, which I can see here in the Dixie, it's coming up as 28. All right. But we're not trading the Dixie. We're using the Dixie for our driver so that we can trade GU and or EU. All right. Because as we understand, the US dollar rules the world. Okay. And even though there are fight back and people that are trying to change that, the United States dollar, USD, still constitutes as whatever pair it's teamed up with as a major pair. Yeah, it's the major driver of most of the markets. So if we wanted to trade GBP USD, like we did yesterday for a fantastic 1 to 11, 1 to 12 trade, we kind of want to know what the US dollar wants to do. We want to know what that driving factor is going to happen. If that US dollar is really gaining strength and go into space, well, that means that our GU and EU will be coming down and give us a great indication, a great bit of confluence for us to say, okay, we'd like to take GU or EU for the sell. Okay. So I'm looking at the Dixie as that, that defining indication of what these markets may be doing. Now, right here, have a look. We've seen these markets take liquidity from just above, from about, who knows how many pips above, of New York session lows, and tap into imbalance that we can see here, which we understand these are all points of interest because we understand these markets. We have a level of education and understanding about these markets. We do not know what these markets are going to go and do, but we have a level of understanding of what the markets historically have done. They historically like to, take liquidity and then run in the opposite direction. They historically like to close imbalances. Yeah. They historically like to make retracements. Even if they want to be bullish, we understand markets like to retrace. Okay. They move in waves. There's no market that just does that and then just comes all the way down and does that. And this comes all the way down. No. Within there, these markets move in waves. They move in waves. We understand that. Okay. So therefore, right now we can see that this, if I zoom out on a smaller picture, okay, because we understand this, Dixie, from a bigger picture. Let's have a look at it on a bigger picture. Let's zoom all the way out. This is a weekly, meaning every single candle you see is a week in time. Okay. Now we can see, not my opinion, fact that the market has been bullish, has been making higher highs, higher lows, higher highs, higher lows. This means that the dollar index, the dollar has been gaining strength since, based upon this chart, 2007. Yeah, that's not my opinion. That is a hard stone fact. Okay, and right now we can see we're in a discount of that trend. Now, could this market decide to start coming down here? Yeah, could do. Yeah. But for now, we want to make the assumption that, just because we decided to step to our computer this morning, yeah, and we turned on our trading view, that now the market is not going to start doing anything different just because we arrive. So we're anticipating that maybe this market is going to push up here because the market does what it has always done forever and ever and ever and ever and ever until it decides to do something else. Okay, so therefore we are watching this market, assuming the market wants to come up here, but watching to see if it wants to do something else. And also because this is on a much, much larger time frame, yeah, week in time. Nobody wants to sit around here for a week, yeah, trying to make a 1-to-1, 1-to-2, 1-to-3 trade. We're not swing traders or position traders. However, this gives us our overall picture. Yeah, it gives us our overall picture. Now we want to, with that in the back of our mind, knowing that we're in a discount, okay, knowing that these markets are very simple. They're driven by the same market factors that drive the entire world, okay, commerce, supply and demand. That's what drives the world, supply and demand. There's no difference just because we're looking at a screen which has little lines and little, squiggles and numbers that are popping up. It doesn't get any more complex than what drives global commerce, yeah, supply and demand. So therefore, when things are, in demand, prices go up. Yeah. When things are oversupplied, prices come down. That I didn't make this up. This isn't me. This is what it is. And you don't have to be a genius to work that out. Okay. When everybody wants that pair of trainers, everybody wants that certain thing, the price of it goes up. Because why? Because they can. Because they've got loads of people who want it. So, I'll tell you what, instead of making it £10, it's £11. Think about an auction house. Think about an auction house. Somebody makes a bid, somebody else wants it, the price goes up. Somebody else wants it, the price goes up. And somebody else wants it, they're fighting over it. Because the demand is there for it. Where the flip side is, hey guys, we've got this beautiful, vase over here from Dominica. Can we get 10,000 for it? Nobody puts up their hand. Guy's scratching his head like, rah, nobody wants the vase from Dominica. I'll tell you what about 9,000? Nobody puts up their hand. There's no demand. The price is full. It's the exact same principle in these markets. Do not let these lines, do not let all these little numbers on the side here, time being down here, Open, high, close being here. Do not let all of these things moving around. Do not let the fact that this is DXY and you've never heard of DXY confuse you or get you scared or make you start thinking this is more complex than it is. It is not complex. What is complex is our behavior as human beings to these markets. But ultimately, they're quite basic. So when we're in here and we're looking at a larger time frame, we understand, okay, cool. This is the larger time frame on a big weekly, zooming out, the bigger picture. But we want to take a trade today. We want to make money today. So we've got to zoom in. Okay. We're all the way out. When we was on the weekly, it was all the way in space. We need to zoom out and we need to at least get on the plane. Knowing you're on your plane and you can look down and then you start to see some roads and houses. You can make out some rivers. That's what we want to see. We want to see exactly where we might land. Are we going to be landing on land? Are we going to be landing in the sea? Are we going to be landing on top of somebody's roof? That's what we want to see. So we go to our daily, we want to identify what's going on. I can see that here, since about June, these markets have been kind of going sideways in this little yellow box. I couldn't see that before when I was on my weekly. When I was on this weekly chart all the way zoomed out like this, I couldn't necessarily identify what is happening right here since June. I can see what's happening since 2007, but I can't really see what's happening right now, over the last 6 months. As soon as I drop to my daily time frame and I zoom in, I start to see a lot more, a bit more informed about what's happening, closer to present day. Closer to present day, the Dixie has been kind of going sideways. Have a look. That's not my opinion. That's a fact. That the market has been bouncing around, boom, 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 boom. If I want to be technical, I could tell you what price, when you look at it on the news, or somebody makes, some analysis about the Dixie, they will say, price of the Dixie has been, ranging in between 98.914 and 95.870 since the last 6 months. And it sounds like overly technical, but that's what he's saying. The market's been ranging in between here and here. All right. And now the question is this: if we believe that the markets are going to continue doing what they have always done forever and ever and ever until they decide to do something else, maybe the market wants to come down here. Maybe it's gone ping, pong, and it wants to ping down here again. Maybe. I don't know. I have a crystal ball. Yeah. But what I do know is from up here, the market came back up to the top of the range. Yeah. Where things were in high supply, and it pushed down and it broke this structure here. The candle actually closed below there. So maybe it wants to make a little retracement. Where to? Well, I'm always interested in 50%. Yeah, so it makes that little green line over there, which says 50%. I'm always interested in a retracement of at least 50%. Maybe the market wants to come up there before it starts to try and get back down to that little ping at the bottom of the range. Maybe. I don't know. But I need to zoom in some more. I've identified my daily ranges, my daily prizes. We spoke about the prizes yesterday. Auntie Jackie's house. Yeah, and Auntie Sandra's house. When you come there, she got rum cakes. She got a £5 note for you. You don't have to do nothing. She told you to sit down. She asks you, are you okay? Every 2 minutes, she's asking you, do you want a drink? Yeah. We know where the prize is. So when we look at the daily time frame as day traders, we need to understand where that prize is, because yesterday we identified where that prize was, which was the previous daily high and daily low of GU. And the market went and it took up both of those prizes. It was greedy. All right. Here we've identified the previous daily high over here by this white line and the previous daily low by this white line down here. We understand that the markets love liquidity, and liquidity sits above and below key levels and points of interest, where the daily high and daily low is a real point of interest. Okay. Now we're able to, this is good. We've zoomed in a little piece. We've seen a little bit more information, but we want to zoom in some more. Yeah, we can see the houses and the roads and that, but we want to zoom in further. I want to see people walking around. I want to identify what street, what highway. I want to get closer. I need to drop my time frame further. Yeah, zoom in. So now I've zoomed in on a 15-minute time frame, and now I start seeing a little bit more detail. Yeah, I start seeing where our previous sessions were, because we understand that there are sessions, just like there are certain times when your market is open, where your barber, try and get a trim, yeah, especially if you go to a black barber's, try and get a trim at some mad time or some early hours in the morning. He's not open till 10 or he's not open to a certain time. How can you get a trim? The market's closed. The shop's closed. Yeah, when you go shopping and you're in your Tesco's, you know that at a certain time the market closes. Whilst it's open, it's active. Look at all this active participation. Look at all this volume. When it's closed, yeah, Asia session is predominantly us saying it's closed. We see less volume. We see less action. Why? Because the market's closed. People are not there. People are not buying. We only go to the Tesco's and there's one teller. And you think to yourself, oh, give me a break. You know, surely someone else can come on the till, please. Yeah. They ain't got nobody on the till right now because it's not a high volume time. Yeah. I'm sure on a Saturday, I don't know, 4 or 3 o'clock on a Saturday, all the tills are open. Everyone's putting in work. Why? Because they've got loads of people in Tesco's trying to buy, you know, what they need. It's the same principle that there are different sessions. So therefore, there should be different times that you understand where the opportunities are in the market. There's different times when lots of volume, lots of movement is going to enter the markets, depending on what market you're looking at. If you're looking at a market that's predominantly an Asian market, or maybe it's active when the Asian session. That's when the Asian traders are at their desk putting in work. Yeah. If you're looking at things that are in regards to the major pairs, maybe like a GU, a US, yeah, the United States and the Great British Pound, well, we wake up 5 hours before America, approximately, depending on where you are in America. Yeah. So we're here right now looking at the charts, and the American people, them are sleeping. It's, you know, 2, 3 o'clock in the morning over there. So if they wanted to trade London session, they got to be up with biscuit in their eye and crumbs around their mouth, dribble around their mouth, trying to trade at 2, 3 in the morning to catch London session. Their session is New York. And New York, by the time New York is opening, for us, you know, in America, it's like now for them. When New York is open, it's first thing in the morning. So we need to understand those different sessions. That's why you can see I've got this indicator, which is the only thing I use as a trader, is just being able to show me where those sessions are and where the high volume elements of those sessions are, so I can identify the highs and the lows. Yeah, that's this indicator here, which is something called ICT kill zones that you can get for free in here on your MT5 just by clicking in here and typing in ICT kill zones. And you'll see it coming up here. Yeah. And there's actually a few of them, it looks like now. All right. I just use this one. I'm sure there's a better one. There's no real reason I use this one apart from I use it. All right. It's just to basically show me the sessions. Yeah. Not for nothing else. Not because it's ICT. I don't rate whatever ICT is talking about. Nothing to do with that. Just because there happens to be one that I started using. Okay. Now, right now, as a trader, as I stress to you guys, I stressed it yesterday, I'm going to stress it today. There is a superpower in knowing what trades not to take. Okay. There's a superpower in being able to say, I took one trade today. Yeah. Because ultimately you need to know when not, if you think about it like this, I'm going to give it to you again in another analogy. It's a superpower knowing when not to cross the road. Forget about knowing when to cross the road. It's a superpower knowing when not to cross the road. If you don't know when not to cross the road, you're going to get licked down. So it's the same with trading. It's not just because you've decided to come to your computer, you've got your phone in your hand, that you've got to hit buy or sell. That makes you a novice trader. That makes you a little man in this trading thing. Because you're out here just squeezing the button, and I'm here sitting there going, what are you doing? I know you're going to get run over. I'll just sit there and watch you for a little while. So look at this guy. Doesn't know what he's doing. He's going to get licked over any minute now, you get licked over. I'm going to sit there and watch you. Because it's not time to trade. Yeah. So you have to be in a position whereby you understand, yeah, whereby you understand the phases of the market. Yeah. You understand when you're supposed to be putting in work and when you're not supposed to be putting in work. And that's why we have a strategy and we have our rules. And when it comes to our rules, we are machines. Yeah, we are not even machines. I don't like that terminology. We are snipers. We have our orders. Yeah. You see, if I'm a sniper and I've been told to take out my target, I'm sitting in a bush. I'm pissing in a bottle. I haven't moved for 2 weeks. Yeah. I'm camouflaged. I am sitting there. I'm on job because I know if I move, if I decide to just quickly just nip off, make a little phone call, maybe scroll on Instagram for a little while, I might miss my target. But let me tell you something for free. When I see my target, I identify that it's them. Black hair, 6'1", boom, 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 matches the picture that I've got in my file. At that point in time, I'm not considering nothing else. I am carrying out my orders. I do not care whether he comes out and he looks like somebody I know. I'm not thinking about his friends and his family and where to. My job is as a sniper to take the shot. Now, whether you like my analogy or not, the point is that you have a task to do. You have your rules. When you see your rules play out, you must take the shot. It's not your emotions. It's not how you feel. It's not whatever it is. You take the shot. You manage your risk. You don't hit him with a grenade, and blow up the whole section of where he's standing and hit all the kids, all the old grandmas and that. No, you take the shot like a sniper. You manage your risk. Okay, and that's what we do here every morning. There are some mornings you hear and I don't say nothing. There's some morning I might not say. Yesterday I didn't say anything. Today, at the end of the session, and I said, guys, GU is breaking structure. It's made a manipulation M. It's about to tap in. That's the trade that we're going to go take. That was right near the end of the session. It might have even been when we was listening to in the live room. Yeah, that's the trade that ran for 1 to 11. Prior to whatever time that was, it didn't give me no reason to get involved. Yeah. So right now I'm looking at this Dixie that is falling to hell. I know that GU and EU must be. Somebody tell me what it must be doing if the Dixie is falling. It must be bullish. Look at it. Since this morning it's been pushing up. Okay. Now we could sit here and go, yeah, we could have, would have, should have been in it, going pushing all the way up in there. I mean, you could have, would have, should have got the right lottery numbers when you picked them. Why did you pick 4 when it was 7? Why did you pick 9 when it was 11? There's no point going, I could have, would have, should have. Back in the day, once upon a time, I might have done this. If like that, that's not how the world works. Yeah, living in the past and wishing that you could have done this. Yeah, and could have done that. This has passed, but something else will come. Yeah, opportunities are rife on a daily basis in life. You miss one opportunity, there will be another. You miss one bus, there will be another. You miss the train, there will be another. Yeah. A lot of the time, novices see the market go doing this and they go, oh my gosh, look, it's going up, because they might be looking at it like this. Have a look. Let me show you what gets the novices. Oh my gosh, GU is pumping. We need to be in GU for the buy. And they hit buy right now. Yeah. Because their fear of missing out, that this market might be going to space, makes them hit the button. But they're hitting the button late. They're late to the party. They get to the party trying to turn up and everyone's ready to go. Everyone's ready to do something else. They haven't even clocked what's been going on in the party. There's a bad energy in the party. A fight kicked off 20 minutes ago. This happened, that happened. They know that the party's going to get locked off. But you arrived late at 2 o'clock and you're trying to put in work and trying to play catch up. You're late. You're late to the party. Accept it. There'll be another party. Maybe there's an after party. You're late. Take time about your coming in with peer energy after everyone wants to go home. This is what can happen in the markets when you are a novice and you have this fear of missing out. I've seen this drop into hell, and yeah, I would have liked to be in a GU EU buy, but I wasn't. There with the core strategy, there is no reason for me to be in this. With other strategies and other playbooks, I can see personally how I would have been in here for the knowing that this market's going to push down. But for our core strategy, there's no reason for me to be in there. And now I'm looking at, look, is this market going for Auntie Jackie's house? Is this Dixie trying to push all the way down here and come and get the price of the daily low? I don't know. Or is this market just tapping into this imbalance that I've also identified here, I think on the hour, or if you can see it in 2 15-minute time frames? I don't know. Is this market tapping into this order block or bullish engulfing candlestick pattern, which is one of the most common reversal patterns and most powerful reversal patterns? If you don't know what it is, it's this. It's the body of the previous candle being completely swallowed by the next candle in the opposite direction. And for me, there has to be some wick sticking out here. So if I'm running you see that little horizontal line? It needs to touch a red wick, and then for me to investigate the next candle and to see the body swallow that candle. That becomes an order block or a bullish, let me not say order block, a bullish engulfing candlestick pattern. Yeah. Is the market just want to tap back into here and then it's going to start pushing up? I don't know. That guy who's trading, who's telling you he knows it's going to go in here, he's a liar. Because if he knows, he would put his life savings on it. He'd sell his girl, the dog, the kids, and put all the money because he knows it's going to turn around here. He doesn't know. I don't know. I take comfort in not knowing. Because me not knowing means I'm going to be using my lot size calculator. I'm going to be sticking within my 1% risk. I'm going to be discerning about it. I'm not putting my life savings on it and just be like, yeah, I know this is going to happen. I don't know. Okay. If we go and look over here, this is our Dixie. Let's go back to our Dixie, present time. Have a look. We're zooming out so we can see. So get to grips to understand how you can move this chart around. Get to grips with moving, zooming in, zooming out, zooming in, zooming out. Yeah. So I'm looking here, but at the same time, if here gets a little bit too muddy, a bit confused, let's zoom out. See what's really going on. Maybe, as I said over here, that maybe this market broke this structure here. Yeah. Making an indication of what it wanted to do, was consolidating here. Okay. Or accumulating. And we understand that the market accumulates. We understand the market manipulates. And then we understand the market distributes. It does this over and over and over again. So maybe if I try to clean this up, because it's a bit busy at the moment, but let me try and clean it up. Maybe that's what happened. The market was accumulating in here. The market manipulated a little bit higher and it wants to distribute in line with the fact that it broke this structure here and it wants to keep coming down. If I was to draw some lines in, have a look, just to guide your eyes. I'm going to make that a solid line. Maybe that market wants to, maybe we're at the top of this range. It's a little bit ugly, okay? But maybe we're at the top of this range because we was here. The market's manipulated out of it to grab some liquidity and now we want to distribute lower. Very, very possible. Yeah, because I also know that there's a big price. Here's a little price from Auntie Sandra. But you see, Grandma's got a big price underneath this liquidity where the market was previously kind of accumulating. Yeah, so maybe that market must come down here first before maybe making a big retracement to 50% of the impulse. I don't know. Yeah, if you're getting annoyed by me saying I don't know, I'm saying it on purpose. I'm stressing the I don't know element because I'm supposed to be here teaching you how to trade these markets. And I am telling you, I don't know what the market wants to do next. That should give you comfort. That should make you think to yourself, okay. Because it's like, as I've said many a times, it's like the weatherman. The weatherman does not know 100% what's going to happen in your area. That's why if you go open your Google app right now, it says there is a 62% chance of rain, of precipitation. It doesn't say raining today, full stop. It says there is a percentage chance of precipitation. They're covering their arse because they don't know. Maybe a gust of wind blows that cloud that rain, that cumulonimbus. Is that have I said it right? A cumulonimbus nimbus cloud. You know what I'm talking about. That was a while ago we done that. Yeah. Maybe the wind blows that away and it doesn't rain where you are. Maybe you come to your house in your rain jacket and it's sunny. And you're like, what the hell? Well, that means that 62% of chance of rain, you happen to fall into the 38% that it didn't rain. It's the same principle with our trading. I've identified these points of interest, these imbalances, that candlestick zone that was there. I said it's dropping into a candlestick zone, wherever that may be. Yeah. I've identified all of these areas. Yeah. Right here, this here is a candlestick zone. If I was to do that. Yeah. Yeah. I've identified all these points of interest, but until this market shows me, until it gives me the real signal. And for us, what that is our unity strategy. Yeah. At the moment, we have had one tick in the box that we have had some liquidity taken, but it was from way above up here. Look, there was liquidity taken below these New York session lows over here. Okay. So that is a one tick. Yes, we have got a one tick for that. Liquidity is taken from here. But now the way the market's raging, maybe this teeth wants to go and teeth some next liquidity from down here. I don't know. Because if it wanted to turn around, if it was content with just taking this liquidity, maybe by now it would have turned around and made a manipulation pattern and started pushing up. So maybe it's not content with that and it's hungry for something else. It's hungry for closing this imbalance. It's hungry for tapping into this candlestick zone over here. It's hungry for this liquidity below here, which is, Auntie Jackie's house. Yeah. And it's our daily low. Yeah. So I'm not going to rush into this because I'm asking myself, I'm concerned, what are you doing? Like, why are you down here? What have you come for? London has started, look, London session started here, and we've seen London just woken up and guys have said, listen, sell. They just hit the button and been coming down here. Are they doing that because they need to fulfill some orders at a specific price here for their customers, for their clients? I want you to imagine, you just woken up, you've gone into your central London offices, you're in Canary Wharf or wherever it may be, you're in your suit, and you've got clients. Yeah, you've got Mr. Abdul, you've got, this person, that person. They're all clients who they'd like to buy the dollar, yeah, at a certain price. You're a market maker. You've got a big order. Someone said, listen, let me tell you something. I want to buy the dollar, but I'm not buying at nothing more than 98.5. Let's make it even slightly different than that. Let's take it out of that kind of analogy and just say, like, you have a buyer of 100,000 PlayStation 5s. It's a big order. Yeah, you have a buyer at that price. Okay, they're not buying at a single penny above £400 a PlayStation. But you know that they've even given you the order, they've given you the card details, says, look, I've got X amount of million quid for you, yeah? Millions of pounds. But I'm not buying a single pound above £400. Well, maybe if you could, for a very short period of time, push the price from £490 down to that £400, if you could manipulate the price in some sort of way, you know that you're going to bag a huge amount of commission for that £3 million order that's coming from Mr. Abdul. Plus, he's one of your best clients, yo. Can't leave him out in the cold. You want to work with him. Now, that is a very crude way of talking about manipulation and how the markets move and go to certain prices. Yeah. But the point is that there are unfilled orders all over this black screen. All over this black screen here, there is unfilled orders. There is Tom who wants to buy at this price, Dick that wants to buy at that price, Sally who wants to sell at that price. There are unfilled orders, just that some fish are bigger fish than others. I've got an order over here for 22 Air Force Ones because I think I'm a big boy. But what they don't know is just below me, at a slightly cheaper price at 98,550, Nike have an order for 20 million Air Force Ones. So if I'm that trader. I'm that seller, and I go and I fill your order because I can see your little 22. You want 22 Air Force Ones there. What you don't think I'm going to push myself down here and get 20 million order for Air Force Ones from Nike? Of course I am. I don't care about you. You're a little fish with your 22 orders, swaggering around the room like to say you got big money. You got big money. Nike's got a 2 million order over here. They want 2 million pairs of Air Force Ones. So we have to try and identify where them points of interest are. And we're trying to ride the coattails of these moves. Yeah. Now that's easier said than done. But the point is we look for clues, especially as day traders. We look for little clues in the market that might mean that it's time for us to get in. Because at the moment, look at this market. It's coming down here. Someone just thinks to themselves, what goes up must go down, what goes down must go up. And they're looking at this trade, this candle right now, like this, like a big red candle, big red 4-hour candle. Look at them, looking at this big red 4-hour candle. And they're just waiting to just hit the button because they think they can catch a falling knife. They're just waiting to just hit the button here because the knife is falling up. I've dropped a knife from the 4th floor and you think you can catch it with your bare hands without opening your hand up. We don't catch no falling knives. Look at this big 4-hour candle. It closes in 11 minutes and 40 seconds. This 4-hour candle does. And when it closes, there will be huge imbalance between here and where it closes. There will be a huge imbalance that I know markets don't like. I know market likes to close the imbalance. But as a day trader, I can't just reach out and try and grab this falling knife because I do not know when this market wants to close the imbalance. It might decide to come down here first before closing the imbalance. It might decide to keep going and go to hell first and later on tomorrow come and close the imbalance. So we don't catch no falling knife. We wait for the knife to fall and hit the floor, bounce around, stop moving, for my eyeballs to identify where the handle is, and then I'm going to reach out and grab the knife. Until then, I ain't interested. This market there's nothing in this market here saying to us to buy. Whoops. It's making lower lows and lower highs and lower lows and lower highs and lower lows and lower highs and lower lows. There's nothing. If anything, there is information here saying that maybe we should sell as a continuation. But that isn't the strategy that we are looking for this morning, because we are trading from London session, yeah, and we haven't got the confirmation that there are other plays that would have allowed us to get into this, but we do one thing at a time. All right. You guys don't need 25 different playbooks. You need to master one of them. And then once you've mastered one of them, you can move on to the next. So you can see all of this energy of this market falling through here. I'm going to remove this 4-hour imbalance for now. I'm going to also even remove this imbalance here. All right. I'm just watching this market. And if I want, what I can do is I can place my AI, my little soldiers, yeah, to stand guard and watch what's going on in these markets. Those are my alerts. Yeah. So I can go in here for argument's sake. I'm going to pop an alert in the middle of this range here. And I'm going to pop an alert just above where current price is. Here. Maybe I should move that a bit because it's going to ring any minute now. All right. Don't worry about it. And then I can look at something else. I can look at the US 30. That is currently just dilly-dallying within our range. If we understand that Auntie Jackie's house, yeah, who's got all the goodies for us, who's got the prize for us over here, and Auntie Sandra's house has got the prize for us down here below liquidity levels. This is Asian session range. We can see how the whole range, all of this energy has been contained within this range here. The market is ultimately at the moment doing a little bit of a hokey cokey in this range. Okay. We can also see, there's other points of interest over here. That's your other auntie's house. Yeah. We can see imbalance in here that I'll identify in a minute. We can see previous points of interest here. This is a New York session low. And here's a wick low over here that we must identify. Oops. Over here. Over here's another level. We can go to our daily. We can hit refresh so we can see what go on. And we can see from here, we want to identify where is the previous daily low and the previous daily high in regards to that information. Well, we can see over here is a previous daily low that the market has taken already. Yeah, if you can't see that, have a look. That was the previous daily low, that wick over here, that we can see the wick right now has already taken that previous daily low. And over here, we can identify over here as the previous daily high up here. Okay. So maybe this market's just taking this previous daily low and it wants to have a little reaction. Maybe it's already had the reaction to close up the imbalance that was between the previous daily wick, this one over here, and where the markets are opened up. Maybe. Yeah, maybe that's already played out. Yesterday, we had an outside red candle, closed outside the range of the previous red candle. Maybe that's a bearish indication for the markets. Maybe. Yeah. On a bigger picture, I'm looking at this, and my concern about this US 30 on a bigger picture is we're kind of sitting a little bit in the middle of this range. This range meaning this and this. Kind of in the middle of that range, which I got a problem with that because the trainers are not cheap, the trainers are not expensive, the trainers are just kind of in the middle of a range, meaning the market could go up or down. I'm a bit concerned about that. I'm a little concerned about where we're sitting in the range when it comes to US 30. However, I don't want to bombard my brain with massive things that are happening based upon, 6 weeks ago. Yeah. I want to be able to understand the bigger picture, but then trade what I see. Yeah. Because I'm a day trader and I want money today. I want the monies today. Yeah. So therefore, I have to be able to be a thief and be able to steal myself a little money here and there. Yeah. We can see that previously. I'm talking about this point of interest here in US 30. The market came and made a beautiful manipulation M with strength and speed. Yeah. But this point of interest, the market didn't tap in. Bearing in mind, this is a 4-hour time frame. Didn't really come and tap in. Yeah. Not until recently. Yeah. Last Friday, the market came and tapped in. Is that a sign that the market wants to continue pushing down here? Yeah. Was all this here just the indication and the correction was all the way back up into here? Now the market wants to continue all the way back down here and break these lows? I don't know. My crystal balls run out of batteries. I do not know. Yeah. But what I can do is zoom in and identify what this market is doing right now. So if this market on a smaller time frame, look, have a look. I've just dropped that down to my hour time frame. Look at the points of interest that I can see. Watch, if I draw some lines in here, this is a line I'm going to draw. I'm going to just hold control, pull out a parallel line. Oh, what a coinky dink, just like that. And then I can see, look, in here, I can see this huge imbalance in here. I don't know whether the market wants to go and close the imbalance right now, but I do know it's a point of interest. Yeah. If I go to my 4-hour time frame, actually no. So if we go to use our Fibonacci tool, maybe, because I don't know if the market's turning around right now, but from about here, if I pull down to where the market's currently come to, this impulse, yeah, we can see 50% of that bearish impulse sitting right in the middle of the imbalance. So I've got one point of interest, the 50% level, sitting on top of another point of interest, that huge imbalance. Yeah, also close to a previous battlefield. So maybe at some point, this happens. I don't know when. I don't know. Is it going to happen right now? Is it going to happen later on? I don't know. So that's the reason why I get a bit more sensitive, zoom in to get more detail, and I wait for some sort of signals. I need a signal. I need something to try and say to me, listen, looks like we might be doing X or we might be doing Y. Now, because of my understanding and the education I've also, embarked on yourself, is that we also understand that markets accumulate, manipulate, and distribute. So even if I want it to go up here, I understand there's a possibility this market could manipulate down here first, make a beautiful manipulation pattern, and then start distributing higher. So therefore, even if I'm thinking to myself, yeah, the market's going to go up here to close this imbalance, the thought of it pushing down first is not alien to me. It's not strange to me. I'm not going to start saying, oh, it's pushing down, I'm going to sell. No, I'm going to be saying it's pushing down out of an accumulation, the market accumulating. Yeah, maybe the market might manipulate and push up higher. Yeah. So I'm using this Asian session, which is this red block here, to frame a potential trade. So what I would do is simply place my AI, my bots, my little workers alerts here, one below price, one above price, okay? And I would actually do it on my broker, on my MT5 is where I would do it, okay? Yes, we use TradingView, blah, 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 yeah? But I get very, very comfortable and very, very familiar with using my MT5 because ultimately that is where I put my money. Yeah. So, whatever broker I've chosen to use, I better get comfortable with that platform. That platform should exist on your mobile phone. Download MT5. It should also exist on your desktop. Now, I do not encourage people to simply trade off of their phones. Yes, I know Instagram, that's what they tell you. Yeah, just all you need is your phone. Yeah, you can do this, you can do that. Yeah, you can. Technically, you can hit the button. Yeah. But I don't encourage people just to only be out here trying to do everything in their small little screen, and trade. Because I purposely, I have this phone. I'm sure some other people may have it also. But I purposely have this phone, right? Because I'm a trader, yeah. And I am active with other things because I want as much real estate as possible, yeah. So I have a phone that has 3 screens and one that opens up quite big. And then, even then, when I've got all of that screen, it's not necessarily the best for you to be looking and identifying zones and liquidity and etc. on your phone, let alone if you've only got the front screen, you've only got this little bit of screen. What your mobile phone is good for, your MT5 is good for, is being able to manage your trade on the go. If I take a trade right now and I get into a great trade, for example, yesterday I'm in a trade for 1 to 11 and I've got to leave the house. Well, I've got my mobile phone. I can look down at it. I can close the trade. I can look down at it and I can say, you know what? Yeah, boom. It looks like the market's turning around on me. I can close it, or I can manage it. That's really, in my opinion, what your mobile phone is good for. Not for you to turn around here and believe the hype that you're just on a roller coaster somewhere, and halfway on the roller coaster, you can just whip out your phone and do some quick analysis on the markets and then slap in a trade. Yeah, that's a journal. That's just marketing. Yeah, you want to be able to have some sort of screen whereby you can be comfortable, zoom in, zoom out, have multiple windows open, see what the Dixie's doing, come back, see what that's what you want to do, especially at a learning stage. Yeah. Anyone who's turning around to you, all you need is your phone. Don't listen to them. Yeah. Unless they're giving you signals, and I don't believe in signals. Unless I'm giving you very, very big signals. For example, like this, I could easily turn around and say to you guys this. You ready for my signal? You ready? My $1 million signal. I believe that the Dixie's in the discount and it's going to be bullish over the next, I don't know, 6 to 12 months. We should be looking for a buy from anywhere around this area. But I can tell you that nonsense. Because more than likely, probability is, even if this market wants to go down, it's probably going to push up first. And as soon as it starts pushing up, whether it's today, tomorrow, whether it's in February, March, June, I'm going to start saying, guys, what did I tell you? Check out the Discord. Yeah, I told you ages ago it's going to come up here. How did that help you? It doesn't help you. Or someone's going to turn and say, I think that there may be some sort of reaction around this price point. Of course, any point of interest, or not to say any, 80% of points of interest is going to have some sort of reaction. Look, I drew this little area of interest ages ago whilst we was talking on this session, and the market's having some sort of reaction in here. And then obviously, if this reaction goes to space, I'm a hero. Look, guys, I told you, from here, he's going to go see a reaction. The market's going to space. If it doesn't, and it just turns around now, I say, well, guys, we had a reaction of whatever these pips are here. You could have taken this much profits. It's just nonsense. You have to be able to manage your own trade, because I can tell you a trade that I'm taking and you don't make any money and I make money because of the way we managed our trade. Yeah, I might have gotten in there very small, and then I might have scaled in. You might have moved your stop. I didn't move my stop. This is why I'm not out here trying to give out fish. I'm trying to give you fish and rod, so you can go and fish for yourself. And I know someone in here is annoyed about it. Oh no, we just wanted to just, passive income. I hear people use this word. I just wanted passive income. Just tell me how I can make billions and I'll just follow my instructions. Just give me some passive. Just tell me what to do. All right. I'm gonna start telling you what to do. You start making money. You quit your job. Money's coming in. Then I just decide I'm done with that. I'm going Dominica to sit underneath a mango tree. Then what are you gonna do? You need to go back and get your job. Like, what would be the point of that? Of having another man give you your food, or another woman give you your food? It makes no sense. What makes sense is I teach you how to do it for yourself. Yeah, and that's what we do here in the mornings. Yeah, all them other guys, I give out signals, and my signals have been 99% correct over the last 6 months. Shut up. It's nonsense. That means everybody in your Discord group's driving around in Lamborghinis, helicopters. That means you own a little island somewhere because everything you do is correct. This is not the truth, guys. The truth is, just like anything, trading requires work. There are highs, there are lows, there are times you're going to make lots of money in the market. There are times you're going to lose money in the market. Yeah, just like your favorite boxer gets punched in his nose certain times. Yeah, this is what happens in these markets. Yeah, so we can see here, the market came and tapped into a point of interest. Now, I do not love what I can see here from a candlestick basis. Not on the 1 minute. Let's have a look on the 2 minute. If the 2 minute looks better to me, I'm going to get a second opinion in my broker, because I'm a bit concerned about a wonder of recent. Okay. So have a look. On a 2 minute, it's not that fabulous either on my broker, or a 3 minute, but we're definitely seeing a push on the 4 minute. On the 5 minute, we've seen a bit of a manipulation, a W. Yeah. On the 5 minute here, there's a little bit of a manipulation that we can't really see it here, but I can see it on my broker. All right. So I'm watching this now to see whether this market's going to correct and continue and break decent structure above. So then the first structure I can see is a 5 minute high over here. Yeah, there is smaller structure if I go to my 1 minute or my 3 minute around here. Can you see a little level in here? That's the same level I can see on my 3 minute also. And we are getting a bit of a push above there. Okay, but I just don't want to rush into here. Why don't I want to rush? Because Auntie Jackie's house is just over here. And I'm concerned that maybe the market came all the way down here. Why don't you want to come on Auntie Jackie's? It's over here. Yeah, I don't want to just rush in at the moment. I want some sort of confirmation that maybe you just don't want to go, Auntie Jackie's, your belly's full, you've had enough rum cake, you just want to go home and chill out. I need to know for sure, or not for sure, but I need some more indication. All right. So we're sitting here, we're watching this on a 5 minute time frame. Have a look. There is a very ugly manipulation situation happening in here on a 5 minute time frame. And therefore, we'd want to see this market, tap back in to some sort of area over here, yeah, before continuing back up past this level. Now, as I'm not trading the Dixie, let me see whether the GU and EU is giving me any more energy. And let me also identify if there's any landmines that might go off today in the form of news. All right. So I've got some orange folders on here as well as red folder. I haven't changed it back since I was telling you guys the other day, but there's red folder news happening in CAD at 2:45, and then we've got red folder news happening at 7 o'clock, which is the Fed interest rate decision, and FOMC economic projections. Okay, so yes, as mentioned, as Brother Alan mentioned, we may get a lot of volatility either prior to, yeah, or during or after this. Basically, today we have to just be on alert, all right, because this Fed interest rate might do the most. Okay. Previously, it was 4%. The consensus is going to be 3.75%. But if this comes out off this consensus, yeah, we may see some real volatility in the markets. Now, what does that mean? Does that mean you should grab your surfboard? Maybe. Maybe if you want to ride a tsunami, yeah, if you want to ride a tsunami wave, maybe. But just know, if you come off that board, the tsunami wave is going to break you into little bitty pieces. Yeah, it's going to snap your back, your knees, your rib cage. It's going to crack your head open. So you have to make a decision. Do you want to go and surf in the tsunami wave, or are you going to sit this one out and wait till the tsunami passes and go and surf with your family and your friends as normal in waters that you know you can handle? Yeah, that's my analogy. There are people out here that want to go and trade FOMC, they want to trade, mad volatility in the markets. And my thing is like this: why? Why are you risking having great technical analysis, being calm, knowing what you're doing, because you just want to make the money in seconds? Why don't you just stick to, things that you can control? Because when that news hits, for a start, your spread's going to increase. You might get slipped. Yeah, there might be slippage. Okay. There might be a few different things that happen that make, you trading a little bit more complicated. Now, we're seeing Dixie, sorry, look like it wants to push above here. All right, so I'm going to be looking at GU. Is there a potential sell opportunity on? All right, and why? Yeah, so have a look. I'm going to wipe my charts because these charts look mad. I'm going to wipe them. All right, so we can see here in our GU, and we will go over very quickly, go over yesterday's trade. It went from 1 for 11, 1 to 11. We can see liquidity was taken from here. Okay, liquidity was taken from here, which is above Asian session, above some previous PM session. We can see liquidity is taken from here, above a New York session. We can see that the market got to here, which is also a bit of a previous battlefield, yeah, which was previous London session. And we can see the market start to stall out. Then we can see, if we look on our time frames, we're looking for what we look for. We can actually see a big old manipulation M pattern at the point here, and the market correcting, and just about in the next 6 minutes and 10 seconds, we need a closure below, looking like it wants to potentially close below. That's our indication, our correction and continuation. That is our ugly M. There isn't lots of strength and speed, but a correction and a continuation on a big, large 15-minute time frame, which may indicate that this sell may be on a smaller time frame. Let's see what we can see. On a smaller time frame, we can't see a clean manipulation M. On a 3-minute time frame, we can see one in here. There was some strength and speed, but the market made a very, very deep retracement in here that I don't love how deep it came all the way over here. And on a 1-minute time frame, that same manipulation M's at the top of the mountain. And I don't like the fact that the market tapped in so deep. I can't lie to you. All right. So at the moment, we're looking at that 15-minute level and wondering, is that the level? But we're also a little bit concerned how the market came and was kind of dilly-dallying in here. Have a look. The market was kind of accumulating in here. So is that market just accumulating to manipulate down here? Maybe to close up a little bit of imbalance below here. Have a look. Got in the 15-minute time frame. A little bit of imbalance in here. You see all this imbalance is potentially in here. Is that the market just want to just tap into that imbalance and then it's going to continue pushing bullishly? This is the concern that I'm having as a trader. I'm looking at it thinking to myself, I don't know. I want to zoom out some more. I want to understand the market and from a bigger picture. But you guys know GU and EU, I'm overall bearish. Yeah, I'm overall bearish because I believe Dixie's in a discount and Dixie wants to gain strength. And I believe that the GU and EU is in a premium. Why do I believe that? Because that's what history's told me. History's saying to me it's in a premium. History's told me that the trend for GU has been like this. Yeah, so we're in a premium. We're at the top of that range, top of that trend. So I'm hoping if the market is continuing to do what it has always done, yeah, that this market has pinged, ponged, pinged, ponged, pinged, ponged, ping. I'm hoping that maybe the market wants to pong. Yeah, if the market decides to go and break that structure, well, then that means the market is doing something else. And we reassess. But at the moment, I'm hoping that we can get into a massive sell and it just sells off and goes to hell. Yeah, and all of a sudden we take our £100 and we're buying a Lamborghini. Yeah, I hope so. we can see the market was pushing up here. Look at this range. Okay, this is our GU. The market was pushing up here. Oops. The market was pushing up here. Making higher highs. Look at my ping pong again. All right, if you can't see it, I'm giving it to you again. Make it a different color. Ping, pong, ping, pong, ping, pong, ping. Then the market did something different. Made a lower low, that orange line, that orange dot. Made a lower high, made a lower low. The question is it done making its lower high? Yeah, if I was to put some lines in, you know, is that market done making its lower high, or does it want to push up further in here? I also want to identify a point of interest, which is 50% of the impulse, which is where we are right now. However, that's not the be all and end all, because last time it did it, it didn't turn around at 50%. Last time it pushed all the way deep, all the way back up into this 618, 786 area, very deep retracement. So I've got to have my wits about me and understand that obviously I need to read and react to what the markets do. Now, at the moment, look at this impulse, all right? So you see how we're zooming in? We're looking at the Russian doll inside the Russian doll inside the Russian doll. Look at this impulse, which is this energy here. Yeah? That energy here is showing me a range like this. So if this actually wants to get over to this other side of this premium up here, maybe right now, the market's going to present an opportunity for the buy. You see? So that's why we've got to be a little bit discerning with how we enter these trades. And if I was to pull out from, for example, from here to over here, we can see 50% is sitting right in that imbalance. So personally, how I feel right now is I'm looking between my Dixie, which is pushing up. Yeah. It's pushing up bullishly. At the moment, you can see it's closed above that point of interest. Yeah. And really, I should be saying I'm in the sell for GU, but I'm still a little bit concerned. So in my opinion, I'll be a little bit risk off. Yeah. So right now, however, we go to our GU, I would be a little bit risk off right now, because I'm thinking to myself, right now, this minute, this market could turn around. Yeah. Right now, as I speak this minute, this market could decide it wants to turn around and start pushing up. However, there is, opportunity that maybe that market wants to keep pushing up or down in this instance. I'm talking about based upon how the Dixie's moving. Okay, based upon how the Dixie's moving. So it's two scenarios. I either stay out of it because it's not 100%. It's not like, this is very convincing, it's very clean. Yeah. Or I would take a jab and I would really, really manage my risk. In that jab, I'm going to manage my risk to the nines. If I normally risk £10, I'm going to risk 5. Yeah. If I normally risk £100, I'm going to risk maybe even less. Yeah. Maybe even less than that. Okay. Yeah, that's where we're at with it. That's how I'm looking at the moment. This is pushing up. It has broken some structure. It has tapped in. I don't like the fact that this is how far we've pushed here. I'm concerned a little bit that right now in this zone, the market might turn around. Okay. I have two options. This is the manipulation out of this little bit of froth in here. Yeah. And this market might continue pushing up. Yeah. Or based upon how the Dixie's moving over here. Because look at this impulse now. Let me show you something. For a start, we're at a previous battlefield. Yeah, this previous low, right now, this minute, is now at a previous battlefield. Yeah, in and around this area. Remember, it's never a line as well. Don't ever get confused that it's a line. It's never a line. It's an area. Yeah, so as easy as I drew that line, I could say this area is a previous battlefield. Yeah. Now, this has already started moving, just like our GU has already started falling. Yeah. I could try and run behind and chase it and jump in late, but I just don't have to. Yeah. I do not have to. I've said to you guys that the reality is that just slow your trading down. Everyone I'll be speaking to, I said, just slow everything down. Yeah, we can see a huge manipulation W has just formed here at the bottom of a range after tapping into our concern, etc. If we see this market on a 15-minute time frame correct and continue, maybe you can decide to say, okay, you're going to get in for the sell in GU and EU as this continues to rise up and take all of this liquidity above here. Yeah, maybe go for these daily highs. Still be a great trade. Yeah, if I go to my 5-minute time frame, let's have a look. Not as clean. 3-minute, maybe there's something here on a 3-minute. Have a look. I just don't like this little kink in here. Okay, that maybe the market came in there. But either way, personally, right now, just be easy. Yeah. Yes, we've seen a big bullish push up in here, but unless we see a correction and hold on, got 12 minutes and 40 seconds for this candle. So this might dance around for a little bit. If it corrects, have a look. If it corrects, it's going to push down into this area. Let me try and clean this now, because when I'm teaching, I scribble in all over these charts. When I'm trading by myself, guys, I promise you my charts ain't this messy. Yeah. But when I'm teaching, I need to get better at having cleaner charts when I'm teaching. How about that? There's a little bit of self-improvement there, yeah? So this market is in an area of a previous battlefield, yeah? Why is it a previous battlefield here? Look how the market couldn't break it, yeah? Have a look. Couldn't break this area, couldn't break this area, sat on it, sat on it, sat on it, had a reaction to it, pushed through it with strength and speed. This area, this price point is a previous battlefield, okay? So that may mean that the markets may have a reaction from there, either pushing it way back where it came from, or maybe just pushing it enough to tap back into that imbalance to get the juice to go. Maybe. Yeah. Either way, I am not going to chase this. Yeah. Maybe this market, based upon what's happening today, you had the alert from early from Brother Alan. Maybe this market's just got a little bit of volatility and it's not acting, it's not behaving how we think it should behave. Yeah. It's not behaving. I'm laughing because this morning I saw a meme from that comedian. Oh, you've seen him before. And he's just showing like how kids are when they're playing by themselves, all quietly, all nicely playing by themselves. As soon as your phone rings and you pick up the phone, all of a sudden your kid's asking you nonsense, making noise, daddy, daddy, daddy. It's asking you questions, it's banging on something. It's not behaving how you're expecting it to behave. Yeah. And if that happens, it's unexpected. Keep your money in your pocket, chill. I'm looking at this right now, and everything I've said here throughout this call, if I lie, I fly. I identify the point of interest. We turn around exactly in that point of interest. There was an imbalance here. Yeah. The market's had a reaction. It's made a manipulation pattern on a much larger time frame than I may have wanted because it increases my zone. Yeah. But it hasn't been clean on a 5, on a 3, or on a 1 here. So on that basis, I'm chilling. I haven't been involved. Yeah. Now, I know I've still taken a pat on the back that I identified a point of interest where this market's had a reaction. But I don't need to run behind it and chase it, because when I chase it, as soon as I jump for the bus is just going to break and I'm going to miss the bus and I'm going to land on the street on my face on Instagram as the idiot that fell off the bus. I just don't need to do that. I can say, you know what? Cool. This didn't give me a great entry setup. I can wait and see. I can wait and see this market's going to tap back in. Here, here's our manipulation W if you can't see it. Boom, 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 boom. After taking liquidity from below here. Yeah. And whether or not this market's going to tap in here and keep pushing up, or whether this market is just tapping into a previous battlefield and it's actually going to melt through that zone and come and take some of the liquidity that's sitting below these London sessions, New York sessions, and daily lows. At the moment, we don't know. At the moment, this little push up here could be the little trick, the little junicle for all the novice traders to say, oh, yeah, this is going up. And all of a sudden, because today is a volatile day, might not behave how we want it to behave. So just simply take time. My US 30 still ain't done nothing, still just dancing on here. I'm going to quickly show you guys about GU, how we got into the GU yesterday. So GU yesterday was us looking at the Dixie. understanding what the Dixie was doing. Okay. It was us understanding that liquidity was taken from all these levels here pretty early. But we was looking at it and I was saying, look, liquidity's been taken, but we haven't seen no, it hasn't done the reaction that we wanted to see yet. And then when we was on a call, when we was on our live session, I mentioned how this market came, tapped into, there was a level of imbalance in here. Yeah, on like a 5-minute time frame. And I mentioned, look at the time. Yeah, it was about that time because it was after the session finished. But it was, I just started putting on the video. I don't know who was on the call when I said it. I think Jason was, I think Darren was, a couple other people. And I said, we've just tapped in. We've just tapped in to made a beautiful manipulation M. There's one on a 5-minute time frame, but I believe there's actually one on a 1-minute time frame. And the market made a lovely manipulation M after taking this liquidity, corrected and continued. And I said to you guys, wait for it to the candle to close, and then you could have been in that trade getting busy. And that trade, even on a smaller time, let me try and find it on a 1 minute. Let's try and find it on a 1 minute. Yeah. On a 1 minute. See, I don't want you to just think that JP's just out here chatting fluff. On a 1 minute, we saw a lovely manipulation M up in here. The market tapped back in and it closed over here. So you might have got a slightly better entry. Yeah. May have got a slightly better entry in here when that candle closed. Yeah, let's put your stop above here. Who knows? It's about 5 pips anyway. But either way, either way, that market from there, from taking the price, we had that big conversation. We were saying we were talking about Auntie Jackie's house and that. It took the price and it went, which was a daily high. Yeah, if you want me to go back and show you what that previous daily high was. That previous daily high was not today. Here was the previous daily high. Okay, I'm going to make it a white. This was the previous daily high. Okay, and we're currently looking here, just so you know. Let's go back to there. Let's go back to there. Come on. Yeah, we're currently looking here. After that previously, that white line has been taken. We saw our manipulation pattern on a 1 minute and on a 5 minute and probably on a 2 minute. The market tapped in as and when that candle closed. Yeah, as and when that candle closed down below. For me, my entry was like this. Yeah, probably like this. Yeah, I was in. I'm a sniper. I got my protocol. I got my orders. Yeah. And then that market ran and ran and ran, and I got out down here somewhere. When the market, how did I get out? Someone's saying, how and why did I get out? Well, how and why I got out was based upon the market. Have a look. Go back to my daily. Let me hit refresh so you can see it. That was the previous day high. This was the previous day low. That's where the prize were, where my other auntie was there with her, with her cheesy beef patties and veg patties and what's that? What am I keep clicking that for? Daily low, sorry. Yeah. And we identified, this imbalance in here. It's point of interest on the daily. But I was very happy with my profits at that point when I've got an entry over here and the market has pushed all the way down, taking the liquidity from London session, Asian session, New York session, a previous New York session, and then another session over here, look. And as and when I saw the market indicate, after taking that liquidity, that daily liquidity, when I saw the market indicate, correct, and continue against me, yeah, against me with a manipulation W after taking liquidity. I don't know what time frame it's on. I'm just happen to be on a 1 minute time frame, but we can see it here on a 1 minute. On a 1 minute, there's a look. Maybe you can see it or not. It's pretty ugly. It's not the nicest puppy in the litter, but there's a manipulation W there. The market correcting and continuing. I was happy. We just took, look, here's the daily lows. We just took daily lows. We just took the other liquidity. I'm 1 to 9, 1 to 10. I'm 1 to 11 up. I was happy. Let me close out my trade there. Take my monies. Take my monies. And then from that, we saw the market shoot up here, muck around a little bit, come and tap back into maybe a imbalance that wasn't fulfilled. Maybe on a 3 minute, maybe on a 5 minute, who knows? And then the market get pushed up from there. The market pushed up from there. Over here, look. And just I got out at a perfect time. But it's an easy trade. It's a trade that we could have taken. All right? It's the time. I'm going to quickly get a glimpse at gold before we finish up because I haven't looked at gold for ages. Let's look at gold, see what gold is doing. I'm going to wipe my charts and I'm going to analyze this. I was going to say in silence. I'm probably not going to do that. But, you know, we need to understand what gold's been doing. Look at gold. Jeez. Look at your gold chain. Just going up in value, just sitting on the side, just sitting in your jewelry shop, in your jewelry box. Your gold chain is getting more and more expensive. To the point where, look, we pushed all the way up to nearly 4,400, 4,500, yeah, per kilo or per ounce or whatever it is, yeah? And made a huge manipulation M with strength and speed. I'm very, very concerned about this gold market. Is this market just tapping back in? Yeah. It tapped in here, had a reaction. This was the tapping right here. Had a reaction. Could have traded that reaction. But it looks like the buyers, they're like, listen, mate, I know you think you're a manipulation M and you're going to toss this market back where it needs to come from, but we ain't ready to let this gravy train go. And the buyers piled in, even though I had a reaction here, the buyers piled back in. Yeah. And kept pushing this market up in here. Now, is this market going to keep pushing higher and close above this level? Who knows? Gold is a safe haven asset, and the world at the moment is shaky. We don't know what going. Venezuela war, this, that, and the other, blah, blah, blah. They want to run up in Nigeria, boom, boom, boom. America's all over the place. The UK's all over the place. Gold is a safe haven asset. So who would bet against gold that it might not keep pushing up? Everyone's got an opinion online. Yeah, but who would bet against it? All I can do is trade what I see. Yeah, I don't want to make no predictions for the next 3 weeks. I want to make a prediction for the next 15 minutes. Yeah. So we can see here, I can see here that this market has come up to this little level in here, back up into that point of interest where it tapped in previously. And we've kind of been going sideways in here. I can see that straight away, but if I zoom down, it'll be a bit clearer to yourself. Look if I go to my hour time frame. Market's been in that little yellow box. Yeah. So for me personally, in this accumulation, I would like to see this market manipulate and distribute in some sort of direction. If I zoom in further, I'll be able to identify what's happening, around the session energy. We've just seen the market push out take some liquidity from below Asian session, did it early, and then London came and violated that low again. Where's the next price? Maybe the next price is all the way down here. Okay, maybe. Here's Asian session highs. How I feel about it now, looking at it, yeah, I don't love it. We're kind of in the middle of that consolidation range. Yeah, and there isn't too much that's turning me on to make me think to myself, yeah, I really want to get involved. Okay, we can see in New York AM session over here, on a very small time frame. If you see what we need to see, liquidity swept, indication correction continuation, and it's a good time to trade, then maybe you can trade this market. But at the moment, it's not at the top of my list. I'm not like I can't wait to get into gold at the moment. Yeah. Right now, where we are, we could keep coming down here and take this liquidity down here. We could decide we're going to make a manipulation pattern right now because we've taken, I was going to say we took New York. No, well, I think to myself that maybe this market's going to come down here. if I was to had a gun to my head, I'd say maybe the market is going to push down, at least down towards New York lows. Okay. But either way, it's not. I'm not running. I'm not running towards it. I don't care that much about it at the moment. I would care about it when I see it break outside of that yellow box. If it manipulates, great. I'm trying to get in on the manipulation to try and get part of the distribution. If it manipulates to the top end, or maybe wants to do something else, wants to keep coming down, okay. But I'd prefer to put my alerts here and here, which I'm going to do right now on my MT5. Because remember, I said to you, I prefer doing it on my MT5. I prefer having it where my money's at, getting my alerts there. And when they ring, then I'll see what the markets are doing. Yeah, when my alerts start going off and I'm like, what alert is ringing? And then I see that it's my gold alert, then I'll be like, okay, let me see if that market is manipulating and if it's giving me any type of signals, any type of indication that it wants to go up or go down. That's it. I'm not going to worry about, things that are way out of my control. I'll trade what I see and manage my risk accordingly. All right, guys, any questions before we finish up? We did run over again, about 10 minutes. Any questions? Any questions? There's no questions. Have a great day trading, guys. Trust me. The trade that I took yesterday, the trade that we took before, I was saying to somebody on a call, I say, look, they have a problem with going backwards and forwards in their trading. Okay. So they were, they're just going backwards and forwards. They're up 2%. They're, up 1%, down 1%, up 2%. It's going backwards and forwards. Now, look, I'm going to give you a gift. The gift is this. I make more money. I do more in my trading journey when I do less. Yeah. I do more when I do less. Yeah. Don't think that the more times you squeeze the trigger is the more times you're going to hit your target. Yeah. Sometimes you got to take that trade and just let that trade play and just be calm, just relax. Yeah. Let it play, let it do what it needs to do, let it go. Yeah. And even if it doesn't end the way you want it to end, sometimes just be easy and wait till tomorrow for the next trade. Because you're not trying to get paid. Yes, you hear me say, I want money today, but you're not trying to withdraw out of your account every day. Just look at it like a job. You're going to probably want to withdraw out your account at the end of the month. So who cares if you don't make any money today? Who cares if you don't make any money Monday, Tuesday, Wednesday, Thursday? But if Friday you make a 1 to 10, 1 to 15 trade, you have to look at it like that. Do not think to yourself by taking 20 trades today is the best way you're going to pass your prop firm challenge or you're going to grow your personal account. It doesn't really work like that. You actually start getting fatigue. You start getting like, I can't remember what it's called. There's a word for it. Yeah. But your decisions start to become a little bit off. Plus, you've missed maybe a London session. Now you're blurring into New York session. That's a new beast, new energy, mad volatility coming in there. If you're not accustomed to trading that session or whatever it may be, maybe that's what's killing you. Take time. Analyze the charts from the morning that we do in Breakfast Club. See what we look for. And if it plays out the way we thought it was going to play out, take the trade and let that trade go to your point of interest. And get into the habit of saying, yep, today I took a profitable trade. Yep, today I took another profitable trade. That builds confidence. Yeah. Don't think to yourself, oh my God, I lost that trade. I need to get another one. Hit the button again. Oh, I lost that trade. I need to get it. Before you know it, you're like, rah, what's going on? What's happened? I know it's people's ego that makes them do that. I know it's because you lost the trade and you remember being up 1,000 and now you're only up 400 or 500 or 600. Then you're trying to get back to where you was. But that will kill you. All right. So do less. Take a try it as well. Take a trade where you take the trade, let it play out, move your stop loss to entry, and then just see what happens. You letting it run to your point of interest. Maybe put in a TP, put in a take profit, and just let it run. If you're not going to be present in front of the screen, and then come back to your screen seeing, that TP was hit. That is a tick in the box. That's a profitable trade. Doesn't matter if it's a 1 to 3, 1 to 5, 1 to, it doesn't matter. It's a profitable trade where you grew your money. The only reason why that money that you grew isn't enough to buy you a house is because of your account size, not because of your skill. So you still got to rate what you've done. If you take $100 and you turn it into $200 or $300, it could have been 2 or 3 grand. 2 or 3 grand is 2 or 3 grand. 2 or 3 grand buys 2 or 3 grand's worth of Christmas presents. That is a different to £200 or £300, but that is only down to the size of your account, not your skill level. Same way it's 2 or 3 grand, it could have been 200 or 300 grand. The banks, it could have been 2 or 3 million. The hedge funds, it could have been 20 or 30 million. The exact same trade you took. The only difference is the size of your account. So don't be rushing to try and somehow make 25% today on your account, because the banks ain't not doing that. The best traders in the world ain't doing that. They're just consistently making the money and having a big enough account that making 1% today is cool. It's great for them. Making 2%, by the end of the week on their $100 billion account is fantastic for their investors. That's all you need to worry about, guys, is executing upon the strategy. The money will come. I'm telling you, I'm 100% confident on it. You execute on your strategy over and over and over, the money will come. Yeah, whether it comes from you growing a prop firm account, you finding some money, getting some investment, you putting your own money down, that's not important. That's the easy bit. That's the easy bit, putting the money in. You just go to your account, you just, trans over some money from your bank account into your broker's account. That's easy. The difficult bit is can you now trade profitably and grow those funds? Just worry about that. Guys, have an amazing, amazing, amazing day. All right. I'm going to put something on in our live room, and I'm going to hope that you go and fulfill your potential today. Do something great. I'm going to see what the live room wants me to watch, or see what we can put on. I'm going to put on something that says Bitcoin crash. Banks are pushing Bitcoin into a death spiral. Did we watch that yesterday? No, we didn't, did we? It came out 1 day ago, all right? And I've been seeing a lot of stuff about this Bitcoin, but everyone's got an opinion, all right? Like I've always said to you guys, I wouldn't be buying anything at the most expensive it's ever been, okay? However, let's see what they're saying about it. But guys, have an amazing, amazing day. Love and blessings. Thank you for your time.
So there's a theory out there that says,
remember, guys, I want you to share Unity's the Unity website with as many people as you can. Tell them to go on there, join for free. They'll go through the whole process. Even for yourself, I've only seen 1 or 2 people do it, or I want you to go through and do it again, because you're going to get access to some material that you can look at online, etc., etc., etc. All right. Yeah, go and do that and share it. Just tell everyone there's a Unity website. Go and join for free. They can come in the Breakfast Club. They can get some of this energy. Yeah. Love and blessings, and we're going to play this. Banks are pushing Bitcoin into a death spiral. Have a great day.
Is the link in Bitcoin isn't worth several $100,000 by now?
Sorry, is the link in the bio, for the website thing you just said?
But the link is the website, which is unity2b3.com. All right, so I'll put it in the chat. Okay, if I can find the chat, here's the chat. Unity. Oh yeah, we have to close our session as well. I forgot we're recording. I'm just writing this here. And just click join free. I'm going to stop our recording because we are actually recording live.